If I ask you, what is your personal finance strategy? It's a question that may have lingered in the back of your mind, occasionally brushed aside by the chaos of everyday life. But today, it lingers, demanding attention. The notion of a personal finance strategy seemed distant, almost irrelevant. After all, who has time to think about money when there are bills to pay, dreams to chase, and adventures to embark upon? But when we looked at our bank account, our debts, and our aspirations, and we realized that ignoring personal finance was a luxury we couldn't afford. It was time to take control, to craft a strategy that would pave the way to financial freedom. Let's talk numbers for a moment. The average millennial earns a modest income, often weighed down by the burden of debt. It's a familiar tale, one that resonates across generations. But here's the kicker. High achievers, those who dare to defy the status quo, can earn up to 7 times more than their peers. The gap between average earners and above earners is staggering, a testament to the power of strategy and intentionality. So, how do we bridge this gap? How do we elevate ourselves from the depths of financial mediocrity to the heights of wealth and abundance? The answer lies not in chasing after more money, but in mastering the art of financial management. So, let's dive into the money rules. Number 1. Seek wealth, not money or status. Warren Buffett, the legendary investor, is known for his frugal lifestyle and focus on long-term wealth creation rather than flashy displays of wealth. Buffett prioritizes prudent investing, financial education, and philanthropy as means of achieving enduring wealth. Seeking wealth rather than merely chasing money or status involves a deeper understanding of financial well-being and personal fulfillment. A lot of people run after short-term success rather than long-term wealth. The pursuit of wealth goes beyond mere accumulation of money or attainment of status. It encompasses financial stability, emotional well-being, and a sense of purpose. 2. Desire less. Here's some common sense. It takes more time to make money than to spend it. You work thousands of hours to make a certain amount of money, and then you can drop it all on a new car, luxury vacation, watch, or anything else that you desire. We all know that, right? And yet, we keep on spending money like it's nothing. I know this is something your granddad probably said, but the easiest way to grow your bank account is not to spend it all. It's solid advice. The ancient Stoics knew about this too. True freedom means you desire less. 3. Avoid personal debt. Personal debt destroys your net worth like nothing else. Renowned financial expert and author Dave Ramsey advocates for debt-free living through his debt snowball method. Ramsey emphasizes the importance of living within one's means, paying off debt aggressively, and building wealth through disciplined financial habits. To be clear, there's nothing wrong with borrowing money, but we must be wise about taking on debt. Like investing, there are rules to it. But one thing is sure. Never borrow money to buy a car, electronics, or anything else that goes down in value. But when it comes to more complex things like growing, starting a business, investing in real estate, or even your education, think carefully before you go into debt. By living debt-free, individuals enjoy greater financial freedom and autonomy. They are not beholden to creditors or lenders, enabling them to make decisions based on their own priorities and values. 4. Save and invest as much as you can. This is obvious by now, desireless. Avoid debt and save as much as you can. Personal finance is called personal finance for a reason. Your money strategy depends on your age, personality, a place you live, education, experience, and so on. A person who lives in Mumbai probably can't buy an apartment. It's overpriced and renting is probably smarter. Buying an apartment makes more sense in a city with lower real estate prices. In that case, renting is more expensive. No matter what you do, always make sure you have enough cash so you can make an investment if you spot an opportunity. How much is savings is enough? That's up to you. 5. Consider both aggressive and conservative strategies. An aggressive investment strategy involves taking on higher levels of risk in pursuit of potentially higher returns over the long term. A conservative investment strategy prioritizes capital preservation and stability over potential growth. Now you will ask, what should I do? Try to have a balance between both the strategies. This approach involves diversifying the investment portfolio across a mix of asset classes with varying levels of risk and return potential. Many investors adopt a balanced approach that combines elements of both aggressive and conservative strategies. Both aggressive and conservative strategies have their merits and drawbacks, and the most suitable approach depends on individual financial goals. Well-balanced and diversified portfolio can help investors achieve their financial goals while managing risk effectively. 6. Have a long-term plan. This video is for people who do not want to become professional investors or traders. We invest for the long term, not to make money today or even in a year. Our investment strategy is focused on the long term. But that means we also need to generate income today so I can pay the bills. How do you do that? That's your short-term strategy. Short-term money strategy is based on improving your skills and creating multiple income streams. You should invest a lot in your personal education because understand that more skills means more earning power. 7. Start now. Whatever you want to do with money, do it right now. Take the action today and get the benefit from compounding. The most important question you can ask yourself today is this: can I generate value? If the answer is no, then make it your first priority, turn that into a yes. You want to generate value, either by working for it or investing. Many millionaires become rich by following these money rules. You also have a chance to apply it in your financial path. As we bid farewell to these discussions, let us carry all the lessons learned and the wisdom gained into our own financial journeys. Hope you find value in this video. Don't forget to like and subscribe AJ's Info for more financial knowledge. From the bottom of our hearts, thank you for joining us today. See you in the next video. Until then, take care.